In this video, I'm going to be breaking down Chiliz network. I'm going to share with you a couple of the patterns that I see on the chart right now, where I think price could be going and whether or not I'm going to be buying in. If you like this type of content, make sure that you hit the thumbs up button and subscribe for more. Let's jump right into it. So on the chart, I've got Chiliz network and I've got it on a weekly time frame on a logarithmic scale. So we had the low down here in 2019, also in March of 2020. Then we saw price come up for its all-time high in March of 2021. This is a little interesting because the crypto market first kind of in the last cycle, we'll say, kind of first peaked in May-ish of 2021, but then also had a second peak that went a little bit higher in November of 2021. Bitcoin did exactly that. But in this case, we have price for Chiliz network coming up in March of 2021, and that is the all-time high. And we've been in this downward slope ever since then, making the series of lower lows and lower highs. It's kind of formed this channel as I've gotten a couple lines, a couple trend lines drawn already on the chart. And this is actually a really interesting chart pattern because price is contained in this level. And one of the main ways that we can potentially buy into this is when we have a breakout from this channel. And so what would normally happen is we would either have a break to the upside, or in some cases, we actually have a break to the downside. Now, that could happen at any point in time. We could continue in this channel for even longer, but I actually think we're going to be breaking out here soon, and I'm going to share with you why here in just a second. One of the tools that I like to use a lot is the Fibonacci retracement tool. It's a part of my Elliott wave theory kind of analysis and strategy of looking at charts. And also it's just a good tool to use when measuring pullbacks. So with the Fibonacci retracement tool, I'm going to draw the tool on here going from the lows that we had in March of 2020 up to the highs that we had in March of 2021. And you've got these different levels here. You've got a few different levels with the Fibonacci retracement tool, and don't have time to go too deep into all the different levels, but basically how this tool works is that there's certain levels that price likes to come and retrace back to. So here would be the high, the pivot high, and price, would retrace back to certain levels before turning around to continue on to the upside. And if you get into Elliott wave, you'll understand that there's different levels for the different waves, that there's a tendency for some of them. It doesn't always happen. But in this case, this would be a wave one, this move all the way up to the upside in March of 2021. And the pullback would create a wave two. And a couple of the common levels that a wave two retraces back to is first the 0.618 level, but then also the 0.5 level. That just basically means that prices retrace back 50%. The measurement from this low up to the high, prices come back 50%. And you notice we have a couple of the lows kind of coming right back to that level. We have this one here, which was in October of 2023. It bounced, hit that level of resistance on the trend in this channel, but then price came down, tested, and then just went slightly below that level. And then we got a bullish engulfing candle right over this 0.5 level. Now, if you've seen some of my other videos, you know how much I love talking about the bullish engulfing candle, and it's because it's happening a lot on these crypto charts. Basically in the same week, in the beginning of November, which is right around the US presidential election. And so when you have a bullish engulfing candle, it does increase the probability of price moving to the upside. It doesn't always happen that way, but when you have price coming back to a level of support, or it's towards the end of a pattern and you get a bullish engulfing candle, it just gives me at least a little bit more confidence to know that we should be moving to the upside. And of course, we've got a few candles here. So that to me could be the low of this wave two, of this entire move down. And of course, it's too early to tell. We could see price come up, hit the resistance level, and continue down even further. We don't know. We just have to wait and see. However, I do think that with price coming down to this 0.5 Fibonacci retracement level, that is a level of support. We had the bullish engulfing candle right here. And there's also the way that the RSI is holding up above the 40 level. I've got the moving average on here, but we've got a nice pivot right here on that 40 level of the RSI. This is a momentum indicator, basically showing which way momentum is headed, either to the upside or downside. And because we had a nice rounded pivot here, I do think momentum will continue to go up and past this prior pivot high on the RSI, and price will also follow along. But I'm not necessarily looking to buy in quite yet, because I want to wait to see price fully break out of this range with a candle close, not just a wick, not just a wick here where price comes and then closes back down. I want to see a clear break of this resistance line, probably a retest, which it often does. It may retest on a Fibonacci level, or it may retest on this actual trend line. I mean, it could even do something like this and do both. Once it retests and then there's another bullish candlestick pattern to reverse it, then I think we could be headed to the upside. So that's when I would potentially be buying into Chiliz network, is once I see price break out, retest, and then continue on some type of candlestick pattern right around support to let me know that buyers, in fact, are stepping in. Now, when it comes to where price could go, there's a couple different ways you can measure. And I want to be careful with this part, because this crypto, this chart does not have a ton of data in the scheme of things. I mean, it's only been around for a couple of years, and using some of the traditional ways of setting targets, especially with Fibonacci extension tools and Elliott wave, may make the price target seem way out of proportion. But at the same time, people have done that on Bitcoin over the years, and those price targets have gotten blown out of the water. Price just continues to go beyond them. So I will just share with you a couple of ways of measuring this. And they're going to be with the Fibonacci trend-based extension tool. And so what I would do is, again, with Elliott wave, again, not to be able to go too deep into Elliott wave, but if this is a wave one and then a wave two, wave three is typically longer than wave one. And so how we can maybe set a price target for wave three is by just measuring how long wave one is. So we can do that by using the Fibonacci Fibonacci extension tool, starting at the low and then going up to the high. That basically measures the length of wave one. And then now we've got our ruler. So then now we can compare. And I like to set it, if price came to a level, a Fibonacci level, I like to set it there. And so we basically had that Fibonacci level come right around there. So then now we have these different levels on the left, and this is basically comparing to wave one. So at this one level, that means that price would be the same exact length as wave one. So if wave three starts here, then wave one, if price were to go there, it would be the same exact length as wave one. And so in Elliott wave, that would almost be a fair assessment that wave three is going to be at least wave one. Technically in Elliott wave, wave three cannot be the shortest wave. And so if wave three is shorter than wave one, then that means wave five would have to be shorter than wave three. And so basically it would look a little bit different than this, but this is a typical 5-wave structure, and a lot of times wave three is the longest wave, and you can kind of see that here as well. But at a minimum, it would be at least the length of wave one in most cases. That gives us a price target of 14 $14 per coin. And as I mentioned, that seems kind of crazy. I mean, from where we are right now, that would be over 150x, 160x. I mean, that's a crazy price movement. The more crazy thing is that's already happened, not only in this crypto, but lots of others. And so if you're someone who's been in the crypto space and you've been around to see some of these massive price movements, you probably are like, yeah, that's kind of par for the course, from, cycle lows to cycle tops. And so it still seems a little bit crazy to me, as I've only been in crypto for almost one full cycle. But when I measure some of the chart, the price pattern, the charts, I mean, you can already see, I mean, from this low back in 2020 up to its all-time high, just a little over a year later, that's a 250x, a 250x in the first run up. And so if we're talking about that being a wave one and then we're in a wave two, it's possible that we get at least that same thing if this is going to be wave three. But even still, there is the law of diminishing returns, which is a real thing. So I wouldn't necessarily expect it to be another 250x. But from the cycle low, if it were to go there, it definitely could. It definitely could, with it being a wave three. So take that with a grain of salt. Of course, do your own research, your own due diligence. This is not financial advice, just sharing with you what my analysis is. And I'd be curious to know what yours is as well. So drop a comment down below. Let me know what you think of this analysis, where you think price could be headed. I know this was a requested video, so whoever might have been wanting me to break this down, let me know what your thoughts are in the comment section. Thanks so much for watching this video, and I will see you in the next one.